Bitcoin, the pioneer of cryptocurrencies, continues to assert itself as the backbone of the digital asset market. In 2025, it has demonstrated once again that it is not merely a speculative instrument, but a transformative financial asset with global implications. After a temporary correction earlier this year, Bitcoin has regained momentum, climbing above $111,000 and holding steady near $112,000. This resurgence is driven by institutional inflows, mounting anticipation of Federal Reserve interest rate cuts, and the structural evolution of Bitcoin's ecosystem. What emerges is a story not only of price recovery but of a maturing market, one increasingly aligned with mainstream finance while preserving its decentralized roots. Current market and price movements. Bitcoin's recent recovery has been fueled by a nearly 4% gain over the past week, pushing its price comfortably above the psychological threshold of $111,000. This bounce comes after a brief downturn, highlighting Bitcoin's ability to absorb shocks and rebound strongly. The renewed optimism in markets has been tied closely to the expectation of multiple Federal Reserve rate cuts before year-end. Traders are already pricing in a looser monetary policy environment, which historically benefits Bitcoin as liquidity expands and traditional safe havens like the US dollar weaken. Large corporate entities and institutional funds are also returning to the market, seizing opportunities to acquire Bitcoin during consolidation phases. This dynamic has helped reinforce support zones and created a positive feedback loop, where rising demand stabilizes prices and further strengthens investor confidence. Institutional adoption and the rise of ETFs. Perhaps the most profound driver of Bitcoin's current momentum is the institutional embrace of the asset through exchange-traded funds. Since their approval, spot Bitcoin ETFs have seen unprecedented inflows, reshaping the investment landscape. By offering a regulated, easily accessible avenue for investors to gain exposure to Bitcoin, ETFs have unlocked demand from pension funds, insurance companies, and conservative investors who previously avoided direct cryptocurrency ownership due to custody and regulatory challenges. BlackRock, Fidelity, and other financial giants have publicly integrated Bitcoin into portfolio strategies, elevating it from a niche asset to a mainstream allocation. The result is steady, long-term buying pressure that acts as a stabilizer against volatility. For the first time in Bitcoin's history, demand is being driven not only by retail traders and tech enthusiasts, but by institutional investors with long-term horizons and significant capital reserves. Bitcoin as digital gold and a macro hedge. The case for Bitcoin as digital gold has never been stronger. With its fixed supply of 21 million coins, deflationary halving events, and decentralized structure, Bitcoin mirrors the scarcity of precious metals while offering advantages of portability, divisibility, and borderless transactions. Investors increasingly see Bitcoin as a hedge against inflation and monetary debasement, particularly at a time when global central banks are grappling with slowing growth and expanding debt. Unlike fiat currencies that can be printed without limit, Bitcoin's algorithmic scarcity is immutable, giving it a unique position in a world where financial stability often hinges on policy decisions. This quality makes it especially attractive during periods of economic uncertainty, when traditional assets like bonds and equities may underperform. Ecosystem developments, mining, sustainability, and financial integration beyond the markets, Bitcoin's ecosystem continues to evolve. Mining technology has advanced rapidly, with efficiency improvements reducing energy costs and increasing reliance on renewable energy sources. Far from being an environmental liability, mining is gradually positioning itself as a driver of green innovation, often serving as a buyer of last resort for surplus renewable power. Banks and custodians are also playing a greater role. Institutions in Europe, North America, and Asia are rolling out Bitcoin custody services, providing clients with secure and regulated ways to hold and transact in the asset. These developments are bridging the gap between the crypto-native community and traditional finance, ensuring that Bitcoin's infrastructure can scale alongside growing adoption. At the same time, innovation across the broader blockchain ecosystem, from decentralized finance to tokenized assets and new consensus models, continues to thrive. While competitors like Ethereum and Solana push into new frontiers, Bitcoin retains its dominance as the most secure, decentralized, and widely recognized blockchain network. Regulation and legal landscape. Regulation remains a critical factor shaping Bitcoin's trajectory. Governments worldwide are working to establish clearer frameworks for cryptocurrencies, balancing investor protection with innovation. In the United States, regulatory acceptance of Bitcoin ETFs marked a watershed moment, legitimizing the asset class and signaling that policymakers are increasingly willing to integrate Bitcoin into the financial system. Other jurisdictions are following suit, with Europe and Asia adopting frameworks that recognize Bitcoin as both an investment asset and a potential payment tool. This growing clarity reduces uncertainty for institutions and creates conditions for further adoption. While challenges remain, particularly in ensuring consistent global standards, the direction of regulatory momentum appears supportive rather than restrictive. Market risks and competitive pressures. Despite its strengths, Bitcoin is not immune to risks. The macroeconomic environment remains volatile, and unexpected shifts in interest rate policies or global growth could dampen investor appetite for risk assets. Large sell-offs from long-term holders, such as early adopters or corporate treasuries, could also introduce sudden volatility. Competition is another factor. While Bitcoin's role as a store of value is firmly established, other blockchains are competing aggressively for attention in areas such as decentralized finance, smart contracts, and tokenization. Ethereum, Solana, and emerging networks are carving out niches that Bitcoin has yet to fully address. Still, Bitcoin's unrivaled security and brand recognition give it an enduring edge. Investor psychology and market sentiment. Investor sentiment has shifted meaningfully. In previous cycles, retail-driven euphoria often fueled parabolic rallies, followed by deep corrections. Today, with institutional players driving demand, the market feels more measured and less prone to extreme swings. Long-term holders continue to demonstrate strong conviction, with many wallets showing accumulation patterns rather than distribution. This growing maturity of the investor base is critical for Bitcoin's future. It reduces volatility, enhances stability, and creates a foundation for sustained price appreciation rather than speculative bubbles. The involvement of sophisticated capital has transformed Bitcoin from a speculative bet into a legitimate portfolio cornerstone. Outlook and forecast. Looking ahead, Bitcoin's prospects appear promising. Analysts project that if the Federal Reserve follows through with multiple rate cuts this year, the added liquidity could push Bitcoin toward $120,000 in the near term. Longer-term forecasts, stretching into the next halving cycle, suggest that Bitcoin could reach far beyond previous all-time highs, driven by structural demand from ETFs, growing corporate adoption, and broader global acceptance. The key will be sustaining momentum while navigating macroeconomic challenges and competitive pressures. If Bitcoin continues to capture institutional inflows while solidifying its role as digital gold, it could cement itself as not only the leading cryptocurrency, but also one of the most important assets in the global financial system. Bitcoin's journey has been defined by volatility, innovation, and resilience. Its resurgence above $111,000 is more than a short-term recovery. It is a testament to the asset's ability to adapt and grow stronger in the face of challenges. With institutional adoption accelerating, favorable macroeconomic conditions on the horizon, and its unique qualities as a scarce, decentralized store of value, Bitcoin is entering a new phase of maturity.